Joining us now is Neuberger Berman, portfolio manager of Japanese equities, Kei Okamura. Thank you for joining us, Kei. So despite the already tremendous run-up in Japanese stocks outperforming the world, do you think there's still a good opportunity here?
Hi, Sarah. Thanks for having me. Yes, I do think so. Because if you take a look at where Japan's fundamentals are in terms of the economy, it's in a pretty solid position. Personal consumption is healthy. Inflation is moderate. We've got an accommodative central bank. And then a weak currency. And then, of course, the structural reforms that you just mentioned about earlier. This is something that the Tokyo Stock Exchange launched at the end of March. They basically announced that to over 3,000 companies that they have to get their act together in terms of capital efficiency and trying to improve ROE and ROIC above cost of capital. And this has launched a flurry of share buybacks. And we've just started here. Going into next year, we're going to see some more reforms come through. Next year, we're going to see tax exemptions for Japanese investors investing in this market to be expanded. So I think there's quite a bit more upside to be had in this market.
It's so funny, some of the reasons you listed for why you're bullish are reasons that investors hated Japan forever. Low inflation, they were in this deflationary spiral they could not get out of easing. And a lot of people were worried that the U.S. was following in the same direction. It's interesting how the world has changed, and therefore it's made Japan more appealing. But aren't these long-term problems ultimately for Japan?
Yes, no, I mean, I'm definitely not going to sugarcoat that. These are definitely structural issues that have been very deeply rooted in this market. If you take a look at the most recent, inflation readings, they're up, but, compared to, say, where you are in the U.S. and in Europe, still very moderate. A lot of people have been focusing on rising wages, which has been good. I think it's a positive. And if we want that sort of sustainable growth in inflation, you need that uptick in wages. On the other hand, if you take a look at the Bank of Japan's most recent forecast for 2025 CPI, ex fresh food, I think they're reading somewhere around like 1.5, 1.6%. So it still hasn't reached the trend growth line that they see key to sort of move the next step in terms of monetary policy. So I think we still do have ways to go. But in the meantime, it does mean that the Bank of Japan will remain accommodative.
I do wonder, we talked for so long about what that deflationary spiral did to the Japanese consumer mindset. And I wonder if you can talk to how that shifted and whether or not the opportunities there are consumer-centric or not.
Yes. So that is a very important point. And that's something that we look at very closely in our portfolio. And this is something that, Mr. Warren Buffett obviously takes a look at as well. Pricing power, I think, is absolutely crucial in a market like this. If you have, deflationary mindsets that's been well ingrained, how do you continue to raise prices without losing market share? I mean, all of these factors are very important. That's why, going forward, I think it's going to become increasingly important to pick your stocks, make sure that you're invested in companies that have good pricing power and good growth potential as well, and not just in this market but in overseas as well.